And a warm welcome to one and all. Now, if you haven't been here before, I'm Big Scruff, and I do genuinely trade for a living. If you go through the channel, you'll see it. And I'm one of the few that actually trades directly in front of you. And I certainly do for the squad that I look after. I'll tell them what I'm doing before I'm doing it. Now, as much as I would like to have 100% strike rate, I don't at all. But what I would like to think is I have a good set of work ethics. Now, a little salute to Smiler, because in sort of the Answers Hub and the Help Hub that we look at on Discord, I'll kind of flick it over, you'll kind of see this is the Discord. Yes, that's what I'm doing at the moment. I'm putting in my kitchen. We have various different chats about what we're doing, where we're going, etc. And we've got Answers Hub, Help Hub, Small Success. Small Success is something that I'm really proud of because it's getting the guys to think properly. Build from small beginnings, but trade within your means. And I guess that is what's taken us into Coffee with Scruff today. Now, Coffee with Scruff is really just my thoughts that are triggered from the week prior, or somebody's asked a specific question. Well, in this question, if you go through the videos, you'll see I've been looking at Darwin over the last few months and one thing or another. And I had a bit of a rough time with one of them, but it wasn't as bad as you think. I was down 0.5% on the month, but it was swing trade. I was expecting it to be underwater anyway, and it was just underwater a bit longer than I thought and didn't quite go to plan, so some trades had to be killed off and then reset and back again. Now, 1 month out of sort of 8 or 12 is not a major issue. Not really. Certainly if it's under 1%. It becomes a problem when it's red, 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 big green, little green, red. What that's symbolizing is swings from one to the other. What you really want is kind of a steady line. If I do 1% every month, I would be really happy with that. If I did 2% every month, I'd be happy with that. But if I did 10% every month, I'd be happy with that as well. What was I saying there? It was the same number for every month, which shows consistency. That's what we're all striving for. We're striving for consistency. But how do you get it? Where's it come from? Is it from the charts? No, it's not. In fact, I'll have a quick slurp of coffee, pause the camera a second, and drop in the comments what you think consistency is built on.
Well, we're waiting.
Oh, I do like a coffee, you know, boys and girls. I generally do. Right. You thought about it? Consistency comes from your work ethic and your trading plan. Now, if anybody ever watches me trade, I do roughly the same thing day in, day out. When I'm day trading, I definitely do. Levels, direction, patience. I wait to the top of the hour and I ask a couple of questions. Is it ready? Yes or no? What that means is I've looked at the criteria of the indicators that I look at. I've looked at the market structure, size of the candles, wicks, all that sort of stuff. And I decide whether or not there's going to be a movement in the next hour or so. So it's a binary question. Yes or no? Is it ready? Now, if it's yes, I then have to ask another question. Is it worth it? Because there's the old thing. You try and pick bottoms, you get smelly fingers. And the trend is your friend till the bend at the end. Well, you've got to figure out whether or not you're going to have smelly fingers or whether you're at the bend at the end. And if you're at the bend at the end, you become what's called a bell end. Yes, that's correct. I said bell end, not bend. Just means you're chasing the market. Unless you're Popeye, and then obviously you've got your bell end in your hand, and that's why your forearm's so feckin' big. Yes, that was the one for this video. Fuck it. Anyway, you've got to ask whether it's worth it. How do you do that? You look where the market's come from before. You look at market structure. See whether it's between two fixed points of attraction. If it is, have you got enough space to get your profit to the top? And if it goes to the bottom, is it going to crucify you? So is it worth it? If you say yes to that, you ask another question. Can I afford it? Now that's the question that trips up a lot of people, because you're asking, can I afford it? Because you always need to go into market assuming that you're wrong. That's my best gift. I go to market assuming that I'm wrong. That's right. I trade off the back foot. So what I'm looking at the worst case scenario, not the best case. And it's my point of entry to the point of exit where there's so much pain I can't take any more. I've got to give in. And what that is the bottom point of a swing. Now I need to have a number of shields in its path. Now the more shields I have, the more it becomes worthwhile. If it's got no shields and that market starts to tank to that bottom section, I need to measure that out and figure out whether or not my account can take it. Now, it might be 1% of the account, it could be 10% of the account. I'll get you thinking, because I don't subscribe to all this percentage shite. It's absolute bollocks. I don't subscribe to the risk-reward scenario either. Absolute bollocks. But what I do subscribe to is ROI, return on investment. So I need to know if that investment I'm putting into the market is going to make me X and Y. I really do. And that's what I look at. That's why I stage into things, because I'll test the market and then I'll build a position into it based on that sort of analysis. Now, this morning, I was asking the guys if any of them do SWOT. And they kind of looked at me as if I was a bit stupid. You know, what does SWOT mean? Well, SWOT, if you're in business, and certainly if you're in account management where I used to be before I worked for myself, is strengths, weaknesses, opportunities, and threat. So if I look at myself as a SWOT analysis, what are my strengths? Disciplines. You know, I can get in, I can get out. What are my weaknesses? You know, am I overeager? Can I sort of gamble a little bit? All these different little things. You know, what's my opportunities? You know, what's my threats? But you can do that on a chart. Think about it. What's the strength of a chart? It's your analysis. So do an analysis as your strength. Well, what's the weakness? It's the loss. So you work out where the loss is going to be. Right. Is that weakness going to outweigh that strength? Who knows? Right. Then look for the opportunity. Right. Is it ready? Yes or no? What's the threat? Again, you go back to your first questions. Is it worth it? Can I afford it? That's the threat. And you're working all these different bits and pieces out. Is there a news announcement coming? That can be a threat. So, strength, moves fast. Technical analysis is in place. Weakness, I don't know what the bias is. I'm not quite sure. Okay, so I need to strengthen up on that. Can I afford it? You know, is there an opportunity there that I can use my bank balance in order to get the money out of it? See where I'm going? The idea is just to not just look at a chart and go, I can get in here. It's actually break everything down. Break everything down from a personal level. You know, do a SWOT analysis on yourself. What's my strengths? What's my weaknesses? What's my opportunity? And what's the threat? Simple. Then look at that at the chart. Do a similar sort of analysis. You know, boom, 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 boom. It starts painting pictures for you. Now, if you're going into drawdown and you've done all of this, then there has to be a reason. What's the reason? Are your losses outweighing your wins, which they obviously are? How many trades are you taking? Well, if you're taking 100 trades and you're winning 60, 70 of them, but 30 of them are wiping out all of your profits, well, that tells you a story. It tells you you're pretty good at picking trades, but you're not very good at killing losers. Now, it's a question of, am I killing them, or is my stop in the wrong place? Well, if my stop's in the wrong place, that's an easy fix. You either tighten up your trade analysis so your stops become tighter, or you start being a little bit more selective with the trades you're taking on, in the sense that if it's going to be not worth it, in other words, the loss is going to outweigh the win, you don't take the trade. All these different things. And this is what drawdown's all about. You know, you can have one trade that runs underwater for quite a while. With a swing trade, you might only take 3-4 trades a month. Doesn't sound a lot, but for a swing trade it is. It's one a week. Well, what if it's underwater for a week and a half? Well, then that's fine, as long as you planned it. And then the upside has to outweigh that underwater, because not only is it paying off your swaps, your commissions, etc., it also needs to rebuild your emotional value, because that is a currency, your emotions. If you know you're going to be underwater for 3 days and you're at peace with it, that's fine. But there has to be something that makes that reward worth it. And that's kind of where your RRs come into it. I call it return on investment. I'm investing this, I know how much pain I'm taking on, but my reward needs to be worth it. So I'm circling back to where I start. Is it worth it? So if I'm going to be underwater for 500 or 600 quid, maybe it's even a couple of £1,000, because you can be, and I have been. You know, you can be sitting underwater a few £1,000s for a week, and you're looking at it and it's red. And it's like, fuck. Oh. But if it's just part of the natural swing of the market, because you're looking at daily charts and what have you, it's not a problem. You know, because you can go quite underwater, quite away. You're not going to have a 10 pip chart stop on a daily chart. And for those who say they can, fucking good luck. Because the chances of you timing that to the tick on a daily chart is borderline nil. So you're going to have to take some heat on. And as long as that heat is costed in, that's fine. So if you're underwater for 2 grand, but on the other side in a week's time you're getting 5, I'll do that every week. And I'll sit with it underwater for months if I have to, if I'm getting that sort of return. I'll be happy with that. Something for you to think about. Drawdown's a difficult one. And it's... I could rabble on all day about things like this. But from a point of view of trading, I'll kind of wind it up with this. Think about what you're doing. Are you analysing the trade beyond an entry point? Because most of you don't. You just look to see where you can get into the chart and then pray to God you're going to get some money out of it. And I'm telling you flat, and this is why I have a horrendous dislike on the channel. It's because I tell you the way it is, and you don't want to hear it. I could easily show you how to scalp a market. Easily. I could say to you, and I do it with the squad. I'll say, you pick the chart, tell me what you want, and I'll trade it. And they do. They'll go, oh, okay, trade the DAX long this afternoon. And I'll do it for them. Piece of piss. I can go to market anytime, and I'll find you a trade. Anytime. As you can. If you know what you're looking for. But most of you don't. But then when I do look at it, I ask these questions. Is it ready? Yes or no? Is it worth it? Yes or no? Can I afford it? Yes or no? And if I've got yes to each one of them, yeah, I'm going to have drawdown. But I'm not going to be worried about it. It's just a bad day at the office. That's all it is, a bad day at the office. So think about what you're doing. Come to market. I want to trade the DAX. I want to trade it long for whatever reason. You can have two traders, one short, one long, both products same, both make money. They both know what they're looking for, because the market will move both ways each day. Timing is your key. It really is. And if you get your timing right, you reduce your drawdown. And then look at score, stop. Over trading will kill your account. Well, if you're being paid, just bugger off. Go do something else. And you'll be fine. Ramblings of a strange man on a Friday afternoon while he's having a cup of coffee. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.